Hi, this is Paula Martin with the Paula Martin Group. I'm here today with John McGrath from Luminate Home Loans.
Hey, Paula.
And John and I were talking earlier about the terms PMI and MI. And I know those are things that you hear a lot, but you don't always know exactly what that means. So I asked John to come in and talk to us a little bit more about that. Can you tell us what those
Sure.
terms mean?
We have that question a lot, Paula. So mortgage insurance or private mortgage insurance, it's the same thing. And it's basically when someone puts down less than 20%, it's the insurance that provides the protection for the bank for the higher risk on those loans. So people, instead of having to put down 20%, can get in with as little as 3, 5, 10%.
And sometimes I have found that there's reasons why somebody chooses to put down 3 or 5%. It isn't necessarily that that's even all they have. It might just be that they want to utilize their money in different ways. Do you agree with that?
Absolutely. And the one thing I would address to that is if you have good credit, a lot of people with good credit choose to use PMI simply because they keep their other money working elsewhere. If you have good credit, it's much cheaper for you than someone who has poor credit because you're a much less of a risk for the bank. So in that regard, a lot of people do choose to do that.
Yeah. So when we talk about mortgage insurance, sometimes you can have a certain amount of equity and then you don't have to have it anymore, right?
Yes, absolutely. And that's a good point. So if somebody buys a house and they put down 15%, they're going to start a loan at 85% loan to value. And once they pay that down to 78%, it automatically goes away by law. But that takes a little bit of time. And a lot of people say, well, I don't want to wait that long. So as soon as they pay it down to 80%, they can pick up the phone, they can call and get an appraisal done and get that dropped. The other thing that they can do too is they don't have to wait until they pay it all the way down to 80%. What they actually can do is if they think there's been appreciation in their property and they can call their realtor and find out what a current market value is, they can go ahead and go early after 2 years and they can pay for an appraisal and they can get it dropped early.
So is it a minimum of 2 years?
Some are 1 year, some are 2 years,
Okay.
depending on who the investor is.
One thing I will say is that as your realtor, we would definitely be checking in on a regular basis and letting you know if you have equity because we want you to be able to get rid of that too. And we want you to know where you are on your house. So I want to thank you so much for this
Absolutely.
quick little bit of information. I think it was helpful. And if any of our buyers or our watchers out there want to get more information on a loan, they should contact you. And what would your website be?
Our website is www.luminatenh.com.
And what's a good phone number?
603-232-8228.
Wonderful. And of course, you can catch us at thepaulomartingroup.com. Thanks.